All right, everyone, welcome. Happy Monday. Let's get right into the stock market charts. We're going to use technical analysis to try to find trade ideas and really just read the charts for what they're telling us is going on in the market so that we can anticipate what's going to happen in the future and hopefully make some money. This is a big week this week, so you're going to want to pay attention to this video. We've got some big market moving stocks on deck with earnings. So we've got some FANG earnings. I see Google is coming out with earnings on the tomorrow. It looks like after the close. We've got Tesla reporting today after the close. I think Amazon's got some earnings coming up. So we'll look at the FANG stocks and really look at the ones that are reporting earnings. I know AMD is going to report earnings here tomorrow after the close. So again, it's a volatile, there's a lot of volatility in earnings. So we want to make sure that we've got our charts really set on point so that if we see some sort of movement up to key levels, maybe pops up to resistance, that gives us an opportunity to add or establish a shorts, or breaking of support that will confirm, trades. So we want to go ahead and watch that. Let's get right into it. Give me a thumbs up, guys. And if you're interested, take my course. Link is in the description below. All right, so we'll start off here with the triple Qs sector analysis, and this is tech. Triple Qs isn't going to break down until these earnings are out of the way. So this is what's going to move the market. So we want to watch this trend line right now. We've got this hourly trend line right here. We've been walking up that. Recently we had a breakdown, but they snapped it right back up the following day. And so bear trap basically. This is I shorted this breakdown, and then when it started to bounce back up, I covered the short and pretty much broke even on the trade. I'm looking for opportunity to the downside, but it didn't, when it started to recover, I just figured we'll get out and we'll look for a better opportunity. So no harm there, but that was a false breakdown. And now we're just kind of grinding along this trend line again. So likely not going anywhere until the earnings, until we start to see some of these FANG earnings, and those are likely going to start to move this market. So there should be some movement this week that we'll be able to, take advantage of. So we're looking for that breakdown. If you look at the daily, this basically, we have another divergent high right here. I have it circled. I suspect, they might grind this thing up. They might even pop it up and make a new high right before earnings. That's possible. And if they do that anytime soon, today or whatnot, then it's just going to be another divergent high. So those are going to be highs that have a high likelihood of failing. So if I have to put weighting on which way I think that the earnings are going to come out, I think they're going to probably come out negative. And that's because we have this negative divergence in play. So if we make a new high right before earnings with negative divergence, then I suspect the market's going to sell down on the earnings report. They'll find some negative reason. It'll be technically based, and then the headline will tell you why they sold it off. And so again, that's just something to look for. Now, I'm not interested in shorting this thing ahead of the earnings. I want to see a break of these levels. So that's what I'm watching. On the NASDAQ futures, you'll see here, again, we've got this line down here, and I'm just waiting for a breakdown of that. So earnings, if it's negative earnings and we do get that sell signal, we should break this level down here at about 13,770. All right, and an impulsive breakdown, you can see they dip below it twice. We could even move it down if you want to give it the benefit of the doubt. Move it down to, say, 13,730 now, and a break of that. But you want to see a definitive breakdown for the next sell signal. And until we get that, I'm just hanging tough. Again, I don't want to be long into these earnings because of the negative divergence. Now, if the earnings come out positive and the market buys up the tech sector, maybe we'll burn through that negative divergence. And that would be pretty bullish if that happens. That would be something that, okay, we no longer have a negative divergence setup, and we don't necessarily want to look for shorting opportunities. Perhaps we want to look for long opportunities. But until that negative divergence goes away, I'm looking for the short side of things on these tech stocks. So we'll start off with Apple. Apple's earnings are on the 30th of April, so a couple days. on that one. We'll get those here. And basically, what I see in Apple is negative divergence right here. You can see on the RSI and the PPO. Let me zoom in. See how we're just trending down in momentum. The PPO is kind of starting to turn down. We'll see. Maybe we get that cross down, and then the RSI is has turned down. You've got some confirmed negative divergence right there. So negative divergence. Now that's not just a reason to short though. That just tells you look for an opportunity to short. But if it doesn't show up, you don't get a trigger, a trade trigger, then there's nothing to do there. Now, if you look at the daily, I basically, we've got kind of a high right here. Oh, let's get that line right. And there's your, there's your kind of all-time high right there. That's the last negative divergence. So anything can happen on earnings. They could gap it up and make a new high, maybe run it way up here. I don't know. And if it does it soon, we'll probably still have that negative divergence, or maybe they just gap it down. Again, earnings, we're not at any key levels I see at the daily, so I'd be more interested in being short maybe around this 138.50 area, or waiting for some sort of a sell signal or breakdown in tech. On the hourly, little bit of a support plateau right here. In general, kind of looks like it's bull flagging, to be honest, where you've got the flagpole, you're making the flag right here, and then that sets it up for another leg higher. So maybe earnings, maybe Apple runs on earnings. I don't know which way it's going to go. But it does kind of look like it's bull flagging, so keep that in mind. That's a bullish setup, and a break to the upside would be, likely, could bring in that bullish, that run higher to an all-time new high. All right. So mixed signals on that one. We'll see how that actually plays out. Again, if it starts to break higher before earnings, I'd be very suspicious of that. I suspect that, you want to wait till earnings. You want to wait and see what this does. Amazon has earnings on the 29th. And again, if you really look back at Amazon, going all the way back to July of 2020, the thing's just gone sideways ever since. It just keeps it's just sideways chop, for, almost a year now. It does have negative divergence right there. And that is confirmed. You see the PPO, how it turned down. See, it's even crossing. You're getting kind of a bearish crossover right there. And then also the RSI turned down already too. So negative divergence is intact. And we are, we could run up and make a new marginal high. That would be a divergent high if it did it relatively soon. But again, the bigger picture is this thing's just sideways. So if earnings come out bad or poorly, then likely we've got this major support line down here at about 2,936 is, the area that I see it at, and you want to see a definitive break of that. If you break down from there, then you're likely heading down to the major trend line. This is your bull market trend line on Amazon, going all the way back to 2009 or 2008, basically. And you had a reaction there and a reaction there. So 3 reactions. So a break of that, and we're probably heading down to that. You break that, and you're breaking the bull market trend. All right. If Amazon starts breaking the bull market trend, likely the tech sector is going to break the bull market trend. The tech sector has not broken the bull market trend. I mean, it's done it twice. If I go back to the Qs, just to point that out real quick, it's done it twice. Here's your bull market trend from 2009 lows on a weekly chart, and you just walk up that. See, you got support there, support, support. You broke it once, the Fed stepped in and pumped it back up. So then you held support, you held support, you held support. You broke again with COVID, the Fed stepped in and pumped it back up. So yeah, the Fed's in there pumping things up. There's not a free lunch. That comes with consequences, though. And I'll point those out, those consequences that we're starting to see. And we're positioned for that right now. But let me go back to these fangs real quick. So again, that's kind of the levels I'm watching on Amazon. And if it breaks to the upside, it could just continue to run. But again, just watch this kind of sideways range that we've been in for the last year. Those kind of your levels. Google, they have earnings, it looks like, on the 29th as well. I think I talked about that after the market close. So when I look at this chart in general, the price action is very bullish. It's just trending up. There's no bearish price action here. This can probably be extended out to something like this now. So as far as I can tell, we have an upward price channel. And we do have negative divergence, though. You can see here on the PPO, you've got, negative divergence. And on the RSI, you have that as well. So negative divergence, this is divergent high. So, when I look at this and I see the setup, how the chart's positioned with weak momentum, and we're at resistance coming into earnings, I suspect they're going to sell. It's going to sell down on earnings, whether they gap it up in the pre-market, maybe it gaps up in after hours, and then the sellers just come in and it just sells from the open. But I think, once the market opens after we know about the earnings, I think it's going to sell down. That's what this chart tells me. So watch that. If they pop it up, then we're going to look for a failure, or we're going to look for these negative divergences to start to dissolve, to basically get negated, where momentum starts to increase and you burn through the negative divergence. While you have the negative divergence, I'm continuing to look for short opportunities and sell signals. Microsoft, they've got earnings and then going back to Google, if it sells down on earnings, it's probably going to come down to the bottom of the channel. All right, a break of the channel, that would be pretty bearish, but as of right now, it'll probably come down to the bottom of the channel. Microsoft has earnings here on the 27th. And let's see, looking at this one, you do have negative divergence. See the momentum, how it couldn't quite get to the former high in this area, and it's already starting to turn down. All right, so that's confirmed negative divergence. You want to see this crossover. You want to see this blue line cross below this orange line. But it's starting, it looks like it's, poised to do that. And if you look at the RSI, I don't quite have it marked out, but there it is, negative divergence. See how the momentum, it popped up, but it couldn't quite get to the high of the previous high, and it's already turned down. So that's confirmed negative divergence, and that was on a new higher price. So again, we have negative divergence in pretty much most of these fangs. Now that doesn't mean that you're going to get a sell signal, but they're kind of set up to sell off on earnings. That's what it looks like. So what we have to do is just wait, though. We have to wait for the earnings to come out and see, starting to, we're going to look for breaks of support. On the hourly chart on Microsoft, we'll probably wait for a break of this 255.50 area. It probably will gap down. If it's going to break this, you're probably going to come in the form of a gap down. But that would be your sell signal, and then we'll look for Microsoft to start to sell off. On the daily chart, it's just a bullish chart in general, price action wise. The momentum is starting to fade, though. So I see a setup to the downside, but price action is clearly bullish. So we need to wait for the breakdowns or the sell signals in the price action to help confirm. And Microsoft has a ways to fall. If it's going to start to sell off, I could see us coming all the way down to the major trend line. This is your bull market trend line right now. Microsoft has two trend lines. It's got a secondary trend line starting here in June of 2016, and you can see we held support there. So that'd be your first stop, all the way down there at about 189, 190. Or it depends on when you get there, right? It could just drift, could be 200, who knows. You break that, then you got a more major trend line, and that shows up on the weekly, and this is going back to 2009. So your bull market, your major bull market trend in Microsoft is way down here. And this thing's pretty much started to go kind of parabolic. So yeah, if we're going to get some sort of a correction or sell-off in tech, I could see Microsoft coming all the way down to, this trend line. When do we get there? I don't know, and that's the thing. It could drift sideways and get there down here, at 150. I don't have a price projection on where it would actually get to, but just know that you have a major trend line down there that if we start to break down, that could be a potential target. And once you get down there, that's major support. So, you'd want to cover any short position down there and then either go long. That would probably be that'd be an objective area to go long. And Or if it breaks that, then now you're breaking the major bull market trend. If that happens, likely the market's going to be in a bear market as well. So those are all long, way off in the distance hypotheticals. We'll just watch the, we're just going to go back to the hourly and watch this kind of short-term price support right there at 255.50. All right, let's look at Tesla. They report after the bell. See if we can figure out what this thing's going to do. All right, so a couple things. Tesla, negative divergence. It's intact. That has not changed. We do not have a new divergent high, though. So here's your you have negative divergence, but we don't have a new high. So we could easily pop up and make a new high in Tesla. And if it does that, that's going to be a divergent high. I don't know which way it's going to go after earnings. It's kind of a crapshoot to understand which way it's going to go. But understand that, momentum has been dropping off, and yet we haven't made a new high for a while. So if it makes a new high, that's a divergent high. That's a high likelihood area of failing. Otherwise, I'm watching this trend line right there on the daily chart. And you can see just walking up that trend line, looking for a break of that trend. That will be down around tomorrow. It will be down around 640. That would be your kind of key level of support, and a break of that, and I think we're likely heading down, probably hit the 200 and get a little bounce or reaction. But ultimately, I think if we break that 640 area, we're heading down to this 460 area. It's about 461. And that's kind of my target right now for Tesla. Resistance I see at about 780. So if earnings come out good, and maybe they pop it up somewhere in the 788, they kind of make it look like it's going to break higher up at this resistance. Watch for the behavior tomorrow. Do they sell it down, and does it close at this 780 or below? If you see that, that's an indication that this resistance is likely going to hold, and you're going to get rejected at this level and move lower. So that would be an objective area to potentially look at adding to a short or taking a short, in my opinion. So I could see it go either way. This one, it's probably going to gap up to that 780, and maybe they'll make it look like it's going to break above it, and then it'll fail. That's what I think is going to happen. We'll have to wait and see. I want to point out this one, FedEx. It's very possible. I'm looking at the chart. It's very possible that we saw the high for this bull market in FedEx. I want to point out what I'm seeing. Here's your daily chart. Now we've got this trend line support right here. We could move it maybe slightly to about there. We probably should do that just to give it the benefit of the doubt. That looks a little crisper. We're starting to see a breakdown. Now it's not impulsive yet, so I want to see you're below it intraday. We'll see where this closes. But if it starts to get more impulsive through the day and you see selling starting to come in, then that would be a sell signal actually on FedEx. One thing about FedEx is you don't quite have negative divergence. You have negative momentum. See right there, some negative momentum from the past, but no new high in price action. So just negative momentum, and yet price has been moving higher. So we'll see. An impulsive break of this trend line would be a sell signal, but until you see that, we could go higher. One thing to note, though, when I look at the larger picture chart on this thing, on the weekly chart, you can see here, going back to 2009, we've got lots of tags of this trend line. You can see here, tagged it. Now, we have some dips below it. We dip below it there. We dip below it right there. But, lots of reactions on that. And then you can see right here, when it broke in 2018, it was pretty impulsive. That's 3 weeks of pretty impulsive selling. And a nice definitive breakdown. And what's happened over the since that 2018 breakdown is we came all the way in for a back test right here back in December of 2020. Recently it's rallied up, but couldn't quite get to the new high or the high, and it's looks like it's starting to roll over. So again, if I roll back, it looks like this is your bull market. You broke, so first leg of the bear market. Kickback rally or back test, made a new high, and now we're going to start to roll over. Something to look for. I mean, there's a lot that needs to happen, but watching, we'll just keep an eye on how we get that close and see what that closes at, starting to break down. Earnings are out of the way. We got earnings coming up. The next earnings is on June 22nd. So we got about a month or so before the next earnings. So if this wants to break to the downside, we might be starting what looks like a bear market in FedEx, and that's really what I see on that one. Carvana, they're pumping that up this morning. It's not really based off anything. It's just technicals. They're just bidding it up. Resistance is up here at about 306 as of today. Likely not going to get there today, but that's where your resistance line's at. And so, a move up to there would be an objective area to get short. Now, it could kind of grind around and then run up there and make a slightly new high, maybe up around 323, 324. And if it does that, it will be a divergent high. You see the momentum right here on the PPO. It's just been dropping off a cliff. So each one of these rallies is on just really weak momentum. There's no volume in the rally. It's just retail traders and small, algos trying to pump the stock up. But there's no consensus here that this move is legit. So I still see this as momentum dropping and opportunities to short at resistance. So I'm staying short this one, and and if you really look at it, the last couple of months it's gone down, up, down, up, down, up. It's just chopping around. So we'll just sit in this and let it do its thing. I still think it's heading lower down to this 175 area. Snap here again, downtrending. I pointed this out in the last video. You can see we're just downtrending. We just hit that trend line and sell off. So earnings are behind us on this thing. We've broken the major support here on the daily chart. There's your support. Broke it right there, back tested, and we're kind of trending lower. So in general, I'm looking for lower prices in Snap. Looks good to me. 48, next level of support, a break of that, and I think we're likely heading down to this gap, down in this area around $30. So we'll just continue to watch that and let it do its thing. There might be news. They might try to float some sort of fake news or some sort of news out. They do that sometimes. They'll try to pump things or hype things out on something and see if they can't break the technicals. But there's no earnings news that's going to, really pump this thing up. So it's structurally set up to go to the downside. Negative divergence on both RSI and the PPO on the daily. So looks good to me. I'm still short. Okay, we got to watch this one. This one's a little interesting. AMD, they've got earnings coming out tomorrow. So we have a bull market trend, right, going back to 2016. There's your bull market trend on the daily. And we broke trend right here. So we have a clear breakdown. We have negative divergence in play on the RSI and the PPO. So we have a bearish setup. Let's see how, it hasn't been that impulsive of a sell down. So you can see it broke, back tested. It's been just kind of grinding higher below that trend. So what I'm watching for is, what happens on earnings? Is this just a big bear trap and they pump earnings up and it recovers this trend line and they just rally it back up and make new highs? That's very possible. I don't see it in the chart right now, and so I think it's objective to stay short. But if they do, and earnings is pumps it up and it can hold, then I'll just go ahead and stop out of this one. All right. So I'm not super confident in which direction it's going to go after earnings, just because I don't like the fact that it hasn't impulsively broken down too much. This was an impulsive sell down, but it back tested and it hasn't really broke since. It's kind of been hanging in there. So, if you're short this thing, there's different ways you can play it. You can just wait till after earnings, and then if they gap it up and it recovers the support line, just stop out, take your loss, move on. You can taper down your position, into earnings, and then, re-add to that position, whichever, way you are after earnings. That's one way to play it, just to mitigate some risk. You can exit your position completely, wait for earnings, and then, take a play. So, as of right now, I still think it's more objective to be short because we broke this trend line. We have negative divergence. There's all the things I'm looking for. So if earnings comes out positive, maybe they gap it up to the trend line and do another back test. If they can't recover the trend line and it just does a back test, that's an objective area to short, and I'll be looking for a rejection off that trend line to move down. So that's kind of what I'm looking for on that one. And just to wrap up, we'll look at these commodities. there's lots of, this is there's a lot of potential price action this week in just a lot of different stocks with earnings season. So, well, I'll try to keep on top of what I see. But look at commodities today. Look at wheat. Boom, just upside. These, look at corn. Up another. These things are just shooting to the moon. All commodities are just spiking like crazy. Now, wheat's really overbought. I mean, when I look at the RSI, it's about as overbought as it gets. So this is not an area I'd really want to step in and go long. But I've talked about these commodities being, potentially being in a bull market, and I really like them. So the way I played it is with coffee, Joe, because this one kind of lagged behind. So I added, to my position a little while ago. I've talked about that in videos, and again, we're up almost 4% today. Resistance is right about here. It's about 40.66. We're breaking above it intraday. We'll see if we get that close above there. You get that close above there, and we can hold, tomorrow, kind of hold in this area, then I think we're likely, continuing much higher in coffee. So this one looks good, and I like it to the long side, so I'm still long that thing. And again, this is what's happening when, with all the money printing they're doing, all the commodities, everything priced in dollars is going up. So I'm still expecting gold to move a lot higher, and we're not seeing that surge yet in gold. Gold got checked right there at the 1790. But look at this. It's not selling off impulsively. I think we're going to break to the upside. I think we're going to get a breakout above that 1790. And if we do, it's going to be very bullish. I think we're likely starting that next leg higher in gold. Gold and these miners are going to go a lot higher. So I'm continuing to look for areas to add to a long position in a lot of these miners. Because look at that, gold's not, it got checked at 1790 and it sold down a little bit, but it's not really getting rejected. It's still hanging in there. It looks like it wants to run up and just keep tapping at it and eventually break. So I think we saw the lows for gold, and that's what I'm looking for. I'm looking for position areas to add. Like here's Agnico Eagle. If I can get this thing to pull back down to 62.30, that's the objective area to add. So I'll be looking to add there if I can get it. Otherwise, look for the breakout above this downtrend line right here, and that would be your next buy signal as well. Here's another one, Harmony Metals. I talked about this one in a video. I pointed it out. It was at the end of the video, but when it was right down here, I talked about an objective area to go long, and that was the perfect area to go long. It was a backtest of support, and since that area, it's up, about 13% on the bounce from there. So this one is, you zoom out, you had a downtrend line, put in a bottom, put in your bullish divergence, and broke to the upside. There's a breakout, impulsive breakout with a gap up and a rip higher. Back test. So basically buy signal on the breakout, come back test, add to a long, that's another buy signal or buy area, bounce off of that. And as far as I can tell, we're off to the races. We're going to work our way up to the highs around 750 and probably break those highs and start making new highs. So I like this one. And that's all I got, guys. So let me know what you think. Longer video. I really tried to cover some detail. Take the course if you haven't done so. Link in the description below. And I will catch you guys as the price action shows up later.